Hoping that at least for the next couple of minutes, I'll share with you some invaluable insights. And you'll get a little bit of something out of what we're going to talk about. I like the first presentation, the introductory introduction around investment. Because one of the biggest headaches on the continent, it's not a Botswana headache, it's a continental headache, is that our ability to take advantage of the trends that are happening. We tend to miss opportunities because opportunities have to be prepared for. And to prepare for those opportunities, it would mean that you must have a base. And in the environment that we operate, data and analytics are the first door to those opportunities. And hopefully, what we'll go through in the next few minutes is try and understand both what the opportunities look like and how do we move ourselves towards them. Because there's always opportunities in the market, whether for investment or for doing business. But if you're not ready for them, they'll come and go. Whether it's the resource boom or whatever boom and bust that are related to. So what I'm going to try and take you through is I could have had a presentation as a top 10 trends, Google, top 20 trends that are happening. But I would like us to have a conversation about how do we understand our market and how does those things that happen somewhere else in the market actually are a reflection of the things that are happening here as well. So part of the presentation is not a pure reflection on Botswana, it's a reflection of a real estate industry. And those things that are happening somewhere else are also manifesting themselves here. And some of those that look foreign might look foreign because of, as I said, I like the first presentation. So these are the trends I'm going to deal with. And those trends relate to 2022 and 2023. At least I'm not a soothsayer, so I can't see far into the future, so I can only tell you up until where my toes could see. So as a company, our background, or my background, is in banking. I'm a registered professional valuer, but I spend every day waking up doing what I'm doing now, as well as being an asset manager. So analysis and analytics and understanding the market, it's a very important part of what I do and our company does. And I'm also a part-time lecturer and a researcher. So it becomes very important that not only that you need to take advantage of the market, is to be able to understand what are the things that are happening around you. So when you do market research or a market study, they always say you must do a triple circle analysis. What's a triple circle analysis? You draw a small circle and a big circle around that small circle and a bigger circle around the other one. That means you must be able to understand global and national issues or continental issues, which is a big circle, bring them to regional characteristics. But at the end of the day, those things, to understand them, they must bring you back to local. So issue of inventories in real estate is not because of COVID. It's because you'll see later as we speak, the market has changed, but very few people have recognized that the market as we know it in real estate is no longer what it is. The type of buyers, the type of participants in the market have moved. So COVID, one of the things that COVID did was that it constrained consumption, household consumption. So if you do economics, you'll know that economics is driven by two big things. Firms are looking for opportunity to maximize profit, and households which are looking for opportunity to either find employment or earn an income, and also that income is earned for consumption. During COVID, that was constrained. And when the doors opened up, that constrained consumption came into the market, but when it arrived, it found something else. So because, as I said, if you do simple economics, because you've got a pumped up demand with very little supply, now there's pressure on prices, so the values are rising. But then you've got another devil, that if demand rises far faster and it influences prices, even before the war in Ukraine, you are going to have inflation pressures. And the easiest way to deal with inflation, because inflation deals with money and prices, is interest rates. Hence, you'll see in South Africa, in the US, all over the world, interest rates are rising. And when interest rates are rising, and we'll deal with that, it's one of the slides as a trend. So the trend for interest rates rising are going to continue. So what it means is that the guys that are supposed to move out of their house to bring supply, or the developers and the investors, have to deal with that. It's more expensive. So as a result, the buyers are not able to participate or to get the stock they're looking for. Successful companies are the ones that are consistent. Now, consistent doesn't mean remain where you are. Consistency means focus on the one thing, right? So that you can move from 0 to 1. So one of the market changes that has happened, you've got new players that have entered the market. I use the word flippers because that's what most people understand. But these are third-party companies. And what they do is that they are agents and they are brokers like each one of us, and they are attorneys, they are valuers, and they go into the market. Instead of being a facilitator between buyers and sellers, they are players, they buy stock off the market. And they either upgrade that stock to on-sell at a much higher profit, or they hold the stock. And some of them are agents, companies. In South Africa, we've got a company called 3% Commission. It's a franchise owned by lawyers who have created a portfolio for themselves. They are agents, so they get the stock off the market, they buy it, they upgrade it, and they sell it at a much lesser commission. Then we've got virtual agents. What are virtual agents? This is big, and it's going to catch up with us. For some of you that has time, you must go look at a company called Redfin. What does Redfin do? Redfin eliminates the middleman, but it doesn't eliminate the middleman in a way that you understand online buying. It handles the transactions from start to finish. It's like, and take it as an online buying of property without having to engage with a breathing human being. But Redfin doesn't target the buyer as most online marketing does. It targets the seller. It goes to the seller and says, seller. Now, I did a conference and I said to some people that real estate is like, for those that are below 18, you can close your ears. And I said, real estate is like those online things with the 3 X's. You'll know if you don't catch up quick. Why? It's because they're in the service business. But the one thing they do better than us is they never focus on the buyer. They focus on the supplier. Any of those websites, if you go to them, I'm not saying visit them if you don't, or else you're going to answer to your pastor or your preacher. If you go to them, you will see that they don't care about the buyer. They know there's a buyer in the market. They care about the content producer. In our case, it's the seller. They spend 100% of their time making sure that the seller is the best product ever. The buyer will arrive. There's always a buyer for a product in the market. In our market, we tend to focus on the buyer. And the marketers and the sellers, whether you're online or you do mobile, because majority of us have moved mobile. But what we essentially did, instead of taking advantage of mobile, we just moved physical to mobile. So we have not transitioned. We need to transition. It's about service, ladies and gentlemen. It's no longer about product. So if you think service, you will then imagine that if somebody wants to buy a property, they had a reason why they want to buy. So your job is to facilitate how do you get them over the line. It's not about to worry about whether they get approved by the bank. It's you must solution that problem. So rent to own is one of those. When I say we focus on the product, that's why buy to let we think is the most popular thing, or this buy to let, it's been there. You can see there's rent to own for cars, whatever. You look at the client and says, okay, you don't qualify for a bond. What do we do? Because you don't qualify for a bond, we'll facilitate, we'll negotiate for you such that you can still qualify by creating other ancillary things that makes you, because the person is not interested. Why do people need an approval from the bank? They need an approval from the bank not because it's an approval. They need a home. So you need to connect two things. A person is in the market because they need a home. The fact that they have to go through application forms is a neither here nor there. A service means you have to ask yourself a question: how do I get them into a home? Not how do I make sure they go through the process. That's why property stock sales are becoming popular, because they figured it out before we did. They are closing a gap, an equity gap. There are other, in another market, I was in East Africa recently. They've got a product where you don't pay a deposit, but there's companies that are out there that closes that deposit gap in the market. And they're online, they use the cash send, whatever, but they close the deposit gap for the bank. So a person is able to get into a home without worrying about the rest of the stuff. So as I alluded to earlier, because of you now have a market where prices are outpacing